Lending rates eased, liquidity remains strong, and equities are holding steady. Here's what to know this week. The average weighted prime lending rate, or AWPLR, declined by 28 basis points last week to 9.04%, driven mainly by rate reductions at two banks. This suggests that after last week's increase, lending rates are starting to soften again, reflecting easing conditions in the broader money market. Money market liquidity remains very strong, with surplus liquidity rising to around 300 billion rupees. This is largely due to continued dollar purchases by the central bank and renewed foreign interest in government securities. As a result, financial conditions are gradually easing, which supports borrowing, investments, and overall economic activity. Fiscal momentum also remains supportive, with revenue collection tracking broadly in line with targets, reinforcing near-term stability. On the equity market, the all-share price index is consolidating at current levels ahead of upcoming bank sector results. Trading activity is increasingly focused on banks, with active participation from high net worth investors and funds. Selective buying by government-linked funds is helping stabilize key heavyweight stocks and limit downside risk. While foreign investors were net sellers last week, we are beginning to see early signs of renewed buying interest, with some funds gradually returning to the market. In a consolidating market, focus on fundamentally strong companies and long-term themes rather than short-term price movements. That's this week's insight, helping you understand the market and what it means for your money. See you next week.